When it comes to chart patterns, one of the things that we always have to remember is the context within which we will trade them. Now, a rising wedge, just as the name suggests, is a trending pattern, is an uptrending pattern. So here's the pattern that we're talking about here. And what I'm going to do, just so we don't ever get too far away from the reality of what these lines and levels represent, this upper level, I'm going to paint in red. This lower level, I'm going to paint in green. Red is resistance, green is support. So consider what happened at each one of these touch points. Buyers came in, it's buying support versus selling resistance, selling resistance, selling resistance. So it's those touch points that are not only defining what the pattern is, but it's also telling us what it is that's occurring on those pattern, on this particular pattern. So again, what was interesting about the way the dollar Canada was moving in relation to crude oil was it was not breaking down with that overwhelming crude oil strength. The pattern itself, this rising wedge pattern, is a trending pattern. It should be occurring in an uptrend. Did we have an uptrend on the daily chart of the dollar Canada? We did not. So even though I might call this a rising wedge, in reality, what is it? It's two uptrend lines. One happens to be support, the green line. One happens to be resistance, the red line. When I look at a pattern such as a rising wedge occurring in a market that is not trending, then I have to realize that the typical strategies that I'm going to use, I have to put in the context of the market trend. Usually, in a rising wedge pattern formation in an uptrend, I will look for opportunities to buy off support or buy through the break of resistance. Now, these are really both those strategies are uptrending strategies because I'm trying to take advantage of psychology, but we don't have an uptrend here. So I had to be equally as ready for a breakdown through the support, because in an uptrend, I'm not typically going to aggressively trade a reversal. Not when the psychology, not when the directional bias is indicating that traders will position themselves at support because the overall or dominant psychology is bullish. I don't have that here. So even though we did eventually break out, I had to be equally as ready for a trend line break to the downside. In reality, this particular pattern is a breakout entry. This particular pattern presented a breakout entry because it was the resistance level that was taken out. Now, a lot of times I don't like that setup either because it's a higher risk setup. Rather than buying a pullback in the context of an uptrend, we're breaking out through a resistance level to a new high. Well, in the context of a trend, again, not my favorite way, but we did not have a trend here. So really, what this pattern essentially gave us was a momentum strategy. Sideways market, but I've got a pair of trend lines that are defining the support and resistance of this market in a way that I have to kind of say, well, yeah, it's a rising wedge, but in reality, it's really two trend lines that I'm watching in a momentum scenario. So as soon as I consider that this is a momentum scenario because of the market trend, okay, it was trying to take on more bullishness for sure. You can see that with the kick up higher through the wave. This was not a textbook scenario for the move, but really what gave me the confidence was the manner in which the loonie was outright ignoring the crude oil market. You can overlay a 1226.9, and this is a moving average of oscillator. Notice that, because there are two MACDs within the MT4 platform. This happens to be the Interbank FX Trader 4 version. There are two versions. You have that more MACD traditional, and then you have the signal line version of it. This is a signal line version of the MACD, which is what's known as the moving average of oscillator. So I put that down here, and what it gives me is just the histogram I don't need the moving averages over top of this. So what I want to see, because I'm looking for bullish or bearish momentum, is I look at that MACD, and in reality, there wasn't a lot of bearishness at all in this market. Now, I know that for the past handful of sessions, we have been green on the grab candles. In fact, this market, without, if you did not consult the wave and just looked at the green and blue grab candles, you're abundantly aware of the fact that it's a mainly a neutral to bullish market environment. That's the grab candles interpretation, price movement. And again, really, I have to stress what powered so much of my confidence for the breakout was just that outright ignoring of crude oil strength. Now, how far will we head up? That's, of course, the question. Are we going to keep rocketing from here? Well, for those of you that might have missed the breakout, don't worry about it, because you have alternatives. We have uptrends that have now formed on the 15-minute chart. We have uptrends that have formed on the 30-minute chart. There's even an uptrend on the 60-minute chart. I really like the 30-minute and the 15 as opposed to the 60. The 15 right now is actually triggering an aggressive swing buy as we correct into the 20-period simple. So it's a very short-term time frame, but in addition to that, we have an aggressive 20-period simple moving average touch, which again is where I would enter with no more than 1/3 of my overall position sizing. 1/4 to 1/3 of my position sizing. That's all you really need to do at a level like that 20-period simple, especially on such a short-term time frame. If we pull back a little bit more, we might get a more conservative entry on the 15, or if you really want to wait for a much more significant pullback, the 30 might be a good alternative. But again, this is a lot of patience. There'll be a lot of patience required to wait for a 50% correction of that last major move, which represents the breakout on that daily chart. So depending upon how aggressively you want to trade the dollar Canada bullishness, you can look at the 15 or 30. But the Forex market pulse can also help here. That's where it all ties in again. So how would I gauge how aggressively I want to trade this dollar Canada move higher or this loonie weakness? Well, a lot of it's going to be based upon crude. If crude continues to push down lower, the chart of the dollar Canada should continue to push up higher. Another chart to consider would be the dollar index. If the dollar index can continue to climb, or at least move up higher towards the upper ends of the range, that's going to allow the greenback to hold its own against the loonie and even strengthen against it, as we're seeing this morning. I think the key today, though, to whether or not we're going to see that movement higher on the dollar, lower in crude, is the Dow Jones Industrial Average. So when I look at the Dow today, what I need to keep in mind is that what we're essentially seeing right now is pre-market weakness. We're going to open in about 7 minutes here, but bell's going to ring on Wall Street, but we're seeing pre-market weakness. When we have a risk-off attitude, as we're seeing right now in equities, the weakness in the morning, when we see traders pushing the index lower, and how much lower are we? Well, if we take a quick look, so again, the key to this, the key to understanding the Dow futures weakness, how that's pushing crude oil down, how that's allowing the dollar index to push up higher towards the upper ends of its range. All this ties into the fact that I have to keep an eye on what is going to potentially shift the direction on the dollar Canada. So what is the likelihood of this continuation up higher? More crude oil weakness, more risk-off attitude with the Dow. Again, selling off probably to the tune of about 150 to 160 points on the open.